Welcome back, everyone, to our panel discussion on compliance and risk management. How will it need to change post COVID-19? We have with us our moderator for the session, Ms. Bhavna Sanwan, Head Legal and Regulatory, Amazon Pay. Welcome, ma'am, and over to you.
Thanks, Aparna. Good afternoon, everyone. Welcome. I welcome all to this session, where we will discuss the compliance and risk landscape required to adapt to the new normal for the digital payments. The COVID pandemic has significant impact across all the sector in India. On one hand, companies are working round the clock to adjust to the new normal and meet the challenges. While on the other hand, the pandemic has actually opened the door for many new opportunities for fintech. The current situation has actually increased the need for the digital and contactless delivery for financial services. As fintech try to capitalize on this new opportunity, there is a requirement to have a regulatory support. The fintech needs to invest in a new framework to address the increased operational compliances and security risk. And this is the theme on which our panelists will provide us insight. We have a wonderful panel today representing a great mix of practitioners and entrepreneurs. At this junction, I would request our panelists to introduce themselves. Maybe we can start with Shilpa. So Shilpa, can I request you to please introduce yourself?
Sure. Hi, everyone. Good afternoon. It's terrific to be here. I'm Shilpa Mankar Aluwalia. I'm with the law firm Shardul Amarchand Mangaldas. I incubated and now lead the fintech group at the firm. We focus on both the digital lending and payments products and also work with regulators and industry on policy and new regulatory developments.
Thank you so much, Shilpa. Maybe can I request Arpit to introduce?
Yeah, hi everyone. I'm one of the founders of this company called ScienceZ. We are in a space of RegTech within the financial services. Before starting this company, in fact, I was a lawyer and part of a law firm. So have seen kind of both sides to it in my very short career. Nice to be here and looking forward to the chat with everyone.
Many thanks, Arpit. Can I request Charles to give a brief introduction?
Hi, everyone. My name is Charles Delling-Paul. I'm the founder and CEO of ComplyVantage. We are a database of terrorists, money launderers, and criminals. I'm in London currently. We've raised $88 million and we have 250 people.
Fantastic, Charles. Great to have you on the panel. May I request Rohan to please introduce himself?
Yeah, hi. My name is Rohan Lakhar. I am the Chief Officer for Paytm Payments Bank. Been with Paytm Payments Bank for about 5 years now. I have about a decade-long association with Citi prior to Paytm. Thank you.
Thank you so much, Rohan. Thank you, everyone, for taking time out to join us this discussion and agree to share your valuable inputs on compliance and risk management in the current scenario. The contagious nature of the COVID has actually fundamentally altered human interaction and collaboration, which has led to a significant shift in the consumer habits. The perception that cash can be a vehicle for a COVID is actually changing the consumer behavior to adopt more and more digital payment. The psychological factor of people that the bank notes are unclean is actually prompting them to adopt the digital payments, which is quite unprecedented in the history. The people who have never actually paid a bill online are actually paying online. The consumers who have never transacted digitally are trying to adapt and come on the fold of the digital payments. This is a crucial junction for the fintech model and the new opportunity that a current situation has created. It has actually redefining the means of actually transacting and changing human behavior. Considering that financial sector is actually one of the most tightly regulated sector across the globe, there will be a requirement to have a regulatory support to enable these innovations, to enable a true digital financial offering. A growing digital economy can only sustain if there is a innovation and regulation that work in tandem. And in our experience, what we have seen is that the innovation actually is far faster as compared to the regulation, and the regulatory framework is more or less trying to catch up with the innovation. But that definitely has an impact on the new product offering. So maybe at this junction, Shilpa, if I can, request your views on what do you think that India has a regulatory framework to enable the innovative digital financial product? What are some of the regulatory changes that are needed in the middle of COVID that you feel will fast track the digital acceptance in India, that will fast track the cashless transaction in India?
Bhavna, that's such a relevant question because post-COVID-19 in this world, the focus, like you said, has really been on contactless delivery of all goods and services, which of course includes financial goods and services. And fintech is actually perfectly positioned to solve for this. And I say that for two critical reasons. One is most fintech has the ability and the technology to onboard customers in a remote, non-face-to-face digital format. And second, most fintech platforms also have the technology and the ability to offer a completely digital customer journey where end-to-end from start to finish, the entire transaction is completed digitally and remotely. And the next question that actually comes up is exactly what you said, is do we have a legal and a regulatory framework that supports this and allows for this? I'm going to sort of briefly talk about three aspects of the regulation which I think are most relevant to this discussion. One is, the first is KYC. KYC has really been a pain point for fintech over the last couple of years. But now, recently, the RBI has released its video KYC framework, which for the first time allows for a completely remote, non-face-to-face KYC onboarding process. Even though banks and fintech platforms do need to have some manual processing at their end, but for the most part, the entire KYC can be completed via digital submission of documents and non-face-to-face. This, I think, is a big step in the right direction that the law has made. Having said that, I know that there still is an ask from several pockets of the industry to bring back the Aadhaar-based eKYC, which many players found was actually the fastest and the most cost-efficient way of onboarding customers using the Aadhaar-based OTP KYC, which was withdrawn post the Supreme Court Aadhaar decision. So that's one thing that I know the regulators are looking at, and hopefully, they will bring that back in some form, given the situation we're in now. The second aspect is linked to the digital journey that I spoke of. And again, we do have a legal framework that allows for any contracts, terms and conditions, policies that need to be either communicated or entered into as part of the financial delivery of products can be completed online, digitally and remotely, and several fintech platforms are doing that. A question we often get asked is, if I conclude a contract electronically in a digital format, does that still need to be stamped? And unfortunately, the answer is yes. I think this is a good time for the regulators to again look at maybe some exemptions to small value contracts and transactions in an attempt to push the digital financial agenda. The third aspect that I want to speak of very briefly, Bhavna, is this is actually more a risk that I see, which is linked to the fact that as we become more digital and going, like you said, payments and lending products, as we become more digital in the way we interact with financial services and goods, the risk, a key risk that arises is linked to data. Because we all know fintech has the ability to process and analyze several data sets. And when you transact digitally, this does give rise to several more data points than in a face-to-face format. And I think there is an urgent need for a regulatory framework to address data privacy issues and also provide some guidelines on how such data can be used, processed, and stored. There is a bill, a data privacy protection bill that's currently pending final approval by the Parliament. And once that comes out, I think that'll solve this gap. And the one point I wanted to make is the reason for the need for such a framework is not only from a customer data privacy perspective and point, but it's also actually to increase acceptance from the customer, from the demand side in transacting digitally and adopting new fintech products. If a customer feels his or her data is secure, I think the ability to transact and the willingness to transact digitally will also increase. So I think even from the demand side, a secure data privacy framework will actually help address that issue as well, because we all know it only takes one bad actor or one bad incident to break that trust, and that could have implications for the entire sector. So I think data is a key point that the regulations should focus on going forward.
Great insight, great point, Shilpa. I completely agree. I think the last 2 points that are linked to the customer trust, which is more about the privacy and their confidence in the digital payments or the digital transaction itself, which is the need of time, is something which is far more important. And basis the present condition, even the data privacy legislation is being fast-tracked and is already under the consideration of Joint Parliamentary Committee. On your second point, I think on the contract side, you actually made a very valid point. I think this is a time for the legislator to actually review the law purely from a digital standpoint, right? Today, the laws are drafted for a traditional, the in-person transaction, while the product and services are completely moved digital, and we see a large gap there. So privacy framework will address some part, but yes, from the contract perspective, I agree. I think there is a requirement for us to see and get into the legislative changes to give a recognition on a pure play digital executed contract. To your first point, I think the KYC that you touched upon, I think it's a very important point, because KYC is actually considered as a backbone for the financial system, right? Any and every financial product, let it be it with the insurance or banking or SEBI, everything, the customer onboarding itself starts with a KYC, and that has been a point which has been a lot of contention between the industry and RBI over a period of time. It's great to see that RBI is actually taking right steps in a direction to enable the digital-based KYC. The recent video-based KYC norm has actually enabled paperless KYC, if not a personless or no in-person verification. Maybe at this stage, I can jump to Arpit, and Arpit, if you can share your views on the KYC and the recent RBI regulation around video-based KYC. What has been your experience on adoption of digital mean to onboard customers by the financial institution during this COVID?
Yeah, thank you, Bhavna. And I think Shilpa made some very good points there. I think specifically on video KYC and RBI, I think it was very good timing, or maybe pre-knowledge. Either, we don't know, right? Because it came out in January and suddenly there was a lockdown in 1.5 months. So whichever it was, but it definitely led to a lot of reprieve for businesses which were looking to do completely digital and remote onboardings. And to your point, while it's not without a person, it definitely helps them to sustain some products which otherwise would not be possible since there's a lockdown. I think then SEBI subsequently came out in April again to reiterate kind of completely remote presence-less kind of KYC where you don't even need a person, which I think is definitely the futuristic view, even should be for RBI, because eventually you need to move away from the current two-person method that they have deployed, which may not even solve the problem which they were actually trying to address, which is faster, easier, simpler, and less costlier KYCs. I think the way, and I think the question is more to how do we see from here, right? And we had been studying KYC for a long time, and it is unfortunate that RBI in the recent past has become more descriptive from being more principle-based. And I think the whole challenge has been in the last 3-4 years that RBI started defining how KYC should happen. If you go back before 2015, when this entire change happened, if you look at circulars from earlier times, they were just principle-based. In fact, a bank was allowed to frame its own policy on KYC, and it was just called SEBI, RBI's master direction, which then banks had to implement as part of board policies. And boards, and therefore banks could define their own KYC policy as per their own risk measures. Even if you look at FATF, which is kind of the mother body for all KYC regulations globally, it talks about a risk-based approach. And I think what is truly missing, and to Shilpa's point, as regulator learns more about digital, they will have to come out with some sort of a risk-based system to define what KYC should be, because today, unfortunately, the case we have is that the same KYC norm is there, whether you're taking a loan of 1 crore, whether you are opening a business account, whether I'm taking a 10,000 rupee loan, or if I'm just taking a a small instrument of payment. Irrespective, they have kind of mandated the same KYC, like one size fits all, which is not one correct way of approaching it, because the risk may be very different from one product to other product. And second, it does not take into account that a lot of the customers are purely digital and may only want to transact digitally. And therefore, I think RBI and Indian regulators will need to start moving towards something which is a risk-based approach, which you have in US, to be very honest, where in US basis, the risk, they actually define different KYC. Like you may have a very different KYC for just a pure credit card, just SSI and go through, no question asked. For a mortgage, there may be more things to be done. So India has to move to a more risk-based approach in KYC from the current descriptive, and I think that will require a lot of inputs from technology companies, from industry, for the RBI to actually come up with a differentiated framework, and actually believing that the industry or the organization on their own will also solve for it, and not try to like do a job of a product manager and leave that customer onboarding experience to a product manager and do the job as a regulator.
Great inputs. But before we move to Charles, one point: do you see any uptake in the remote solution of KYC that you're providing during this pandemic?
Yeah, no, of course. I think there is a huge demand for video KYC. Like we have closed more contracts in the month of April, May than we did in the last 4 months before that. So we have seen almost a 3x jump. In fact, one of our customers, Aditya Birla, they went live with us on video KYC in their SEBI. 97% of their onboardings happened through video KYC in the last 3 months. So, the numbers are fantastic, very encouraging. For a company like us, of course, it's a good sign. But I think as we learn from these experiences, I think this, for India, this is an experimentation. As we learn from these experiences, we must take feedback and improve our regulations.
Sure, Arpit. I think it's a very positive surprise where actually the solution that RBI has just notified in January is actually being adopted by the industry at this given scenario. I am quite confident, as the things will unfold, the presentless KYC will also be enabled at some stage by RBI, which is definitely one of the important element. The risk that is associated with a human is far more as compared to the risk that a machine may entail, right? So I think one of the demos I have attended by Sciencey, where the face matching is like given the percentage, which is far more valuable as compared to a human being interacting and checking the picture. But I am hopeful that post-COVID, actually RBI will work toward enabling a presenceless and a paperless complete end-to-end digital KYC solution. So moving forward, we have Charles among us. He's based out of London, and he's actually a founder of an organization which is dealing in AML solution. And in the introduction also he mentioned. So Charles, we would love to know what is the biggest trend that you see in the fintech globally that is actually dramatically changing the way fintech operates today. What are the incremental action does the industry needs to take specifically to mitigate the new risk that has come up considering the pandemic situation?
Yeah, so I think in terms of financial crime, what's happened is that overnight everything has shifted, and therefore criminals, terrorists, money launderers have to shift as well. So whereas everything might have been physically beforehand, if you want to move drugs, then there are no longer people in the street, and therefore you have to do kind of bulk shipments. People no longer are transacting face to face, and so therefore you have to move everything online. So in the same way that underlying behavior has changed, so have the criminals. And therefore, in terms of banks or payment companies reacting, in order to understand what anomalous behavior is, you have to understand what normal behavior is. And given that the whole world has changed completely in the past 4 months, and suddenly everything's gone online, everything's come away from retail, that's made it a huge challenge. So yeah, it's been a very exciting time for people responding to changes in behavior and therefore the terrorists and money laundering threats.
Okay, thanks, Charles. I think quickly and now moving to Rohan. Actually, Rohan, the fintech has actually changed the fundamental of operational as well as the new controls that is required to mitigate the risk. One of the on the lighter side, people say that COVID has led to the another virus, which is called cyber attack and cyber virus, which is leading to the risk that is increasing on the cyber attack as well as the security risk. So, Rohan, can you help us with your views on the shift the COVID-19 has actually caused on the operational compliance, right? Is there anything that both industry or regulator can do differently or better in the given circumstances?
Thanks, Bhavna. So you're right. I mean, from a practitioner's point of view, given the situation, the compliance function has to undertake steps that were probably unprecedented, right? So from a regulatory standpoint, not so much of a recommendation. I think regulator is also grappling with the current situation and they are responding to it appropriately. My point of view was more from how entities or the practitioners could respond, and it's entirely my perspective. So to broadly tell you how compliance function typically is expected to perform is largely 3 or 4 core roles, right? One is that being a compliance function, you need to manage the compliance risk that the entity poses. Compliance function also plays a strong advisory role, especially in the fintech and the new bank environment where products are being built, processes are being rolled out. Compliance plays a consultative, strategic partner with product operations, finance, and the entire functions that key stakeholders of the bank. And the third aspect of compliance really is to promote and build compliance culture across the entity so that enough sensitivity around compliance across the organization. And lastly, compliance is also sort of a nodal function for the regulator to interact with and sort of plays a role of a relationship manager. So some of these aspects of compliance have undergone significant change, some not as much. I'll touch upon what are the significant changes that have undergone. So let me talk about how the compliance risk management has or will change given the current situation if it continues for a longer time. Typically, compliance is a second line of defense for the entities, right? And the way a compliance function manages the risk is that you do a compliance risk assessment, which is a point in time kind of an activity usually done annually, biannually, and more frequently if there is a material change in product, processes, the way entity does business, etc., like regulatory landscape, etc., etc. But if you see last 3-4 months, there have not been significant changes in any of the bank's products. Regulatory regime remains fairly stable. But given that the way we work has undergone such a significant change, the whole context of compliance risk management has changed. And therefore, compliance teams across banks have to reassess what kind of risks that are now being posed. So as you rightly pointed out, for example, the way we are working, we are leveraging technology in a big way. People are remotely working, accessing independent networks. So risks associated with compliances to IT, InfoSec, cybersecurity, they heighten up. So you need to recalibrate those. The way you interact with vendors has also changed. For example, Arpit, I'm sure, is interacting with its banks remotely. Therefore, there's a outsourcing risk that is introduced, how you manage it. So all of that sort of has to be reassessed and revalidated as we go forward. And some of the entities are doing so already. And the testing part, which was again a point in time kind of an activity, also has to be now an ongoing process. So this has actually given us time to automate a lot of MISA signals, which could be a leading indicator for us to act upon to mitigate any compliance breaches. In that way, one aspect has been that you recalibrate. The other aspect is you work on automation so that you function in a more responsive way. The second aspect that I want to talk about, and also we touched upon briefly before the session began, was the advisory role that the compliance plays, right? When you are interacting face to face, it's much easier, especially when you're building products as you interact remotely. A lot of it also lost in translation. So compliance team not only has to respond remotely, but also has to now document what they have responded to much more at a granular level, so that the understanding is consistent, and also undertake a more periodic review so that the implementation is also consistent with what the decisions have been taken. So all of that, of course, adds on to the way you work in the compliance function. And third part, which has slightly changed, is how you promote compliance culture, right? I mean, compliance culture is typically driven through interactions, through training programs, and all of that. But remotely, to deliver those effectively is a challenge. In training programs, typically engagement with stakeholders is a challenge. So we'll have to figure out newer ways to interact with folks, keep them engaged, all of that. So all of that has changed. From a regulatory relationship perspective, I'm sure both of us are learning to deal with the new normal. So RBI, the banks, I think from that standpoint, there is no significant change, but just wanted to highlight these aspects where we are working and sort of trying to address.
Sure. Many thanks, Rohan, for your valuable insight and actually hands-on experience. I completely agree. This is a time when the leadership needs to be far more agile. The communication and the action matters the most than ever in the history. The new framework for the compliance that needs to be adapted on a daily basis is super critical for the sustenance, and I would say now it has become a core pillar, not only in fintech, but all the industries across the board. So now quickly moving forward, we have a lot of interesting conversation, but in the interest of time, I will quickly jump to a quick round of discussion or a question, and I'll request each panel to give their brief views. Maybe, Charles, we can start with you. What compliance and risk practice you admire in other part of the world, and your views if that can be replicated in India?
So I think a key thing that Europe's done well is a kind of an approach to corruption around political exposure. So in terms of money from corrupt politicians and being able to track that, having lower thresholds, being able to track it around things like say prepaid cards, doing much more diligence on higher value transactions. I think particularly as the EU has expanded eastwards into jurisdictions like Romania and the former Eastern Bloc, I think there's a lot of systemic corruption there. And I think what you've seen is the measures there, particularly in the kind of eastern states, clamp down on endemic. In terms of being able to make a root and branch change around localized corruption, I think much more stringent legislation around control of politically exposed persons would be welcome, I think, in India.
Many thanks, Charles. It was actually very heavyweight suggestion. While there are some compliance requirement with regard to the politically exposed people, but yes, your suggestion on the overall framework is really outstanding. So thank you so much for all your inputs. Moving forward to Shilpa. Shilpa, your views, if you have a magical wand and you can make one thing happen, what would be in a given regulatory and compliance scenario?
Gosh, Bhavna, I'm sure a lot of us at this point wished we had a magic wand. Well, for starters, I would get rid of COVID. But apart from that, I think moving to a fintech regulatory perspective, this is something I spoke of earlier. I would actually, I think, wish for a sensible data protection framework. And why I use the word sensible is I think we need a framework that strikes a very fine balance between two things. One is obviously protecting consumer data, but the second is also allowing fintech to continue to do what they do best, which is access data, analyze data, and customize financial services and products to customers. Fintech also uses that data to open access and create new distribution channels and service segments which may not have had financial access from banks and the traditional players. So it plays an important role in financial inclusion as well. So I think a framework that actually meets these two fine requirements of what is needed, and maybe it's a magic wand that can achieve it.
Thank you so much, Shilpa. I completely agree with that. Data privacy legislation is actually the need of the hour. But the balancing part that you've called out is actually the key, where protecting the interest of consumer, but not at the cost of innovation is actually the need of ours. So thank you so much for your inputs. Moving forward, next up, so Arpit, can I request you, what is the biggest regulatory issue or a bottleneck according to you today? If you had a torch, what dark patches would you shine light on?
Yeah, so Bhav, in fact, you use the correct term, right? Dark patches, something which people don't seem to at all look at. And I've been a great believer in this. One of the reasons to even move away from law and start this company. I believe enforcement of contracts in Indian courts is the biggest bottleneck for this country for the last 40, 50 years. And even if you look at finance, my belief is all problems emanate from our dysfunctioning judiciary. And therefore, even if you look at finance, the reason for very high lending cost is because the risk that compliance people take into account for non-performance or NPAs are far higher because it's very difficult to collect. And therefore, you have to take that into account and then give loans at a higher rate. If you look at our payment infrastructure, the entire risk of frauds leads to higher costs for the organizations. And you would see a similar effect when it comes to investment. And a large reason is that in India, if you look at the statistics, we rank 163rd among 190 countries in the world. Like we would rank below a lot of underdeveloped nations when it comes to contract enforcement. And this is the data from UN body which tracks it, and which I think our government comes that we have jumped up multiple points in doing business report, but I think we are awfully bad at enforcing contracts. In fact, as per that report, an average time taken to enforce contract in India is over 3 years, which is, it's just unbelievable, right? You take 3 years to, if there's a dispute, if a bank wants to repay a loan. And I've been on the other side, I've been a lawyer. Our classic strategy was if there's a loan to be paid, you would just drag it in court for years and years. And that eventually is cost to your country, that is cost to the bank. And end of the day, that cost is being borne by all of us as citizens in higher loans, in lower interest rates. So I think one problem, if I could point a torch for this government to solve, and I don't have a solution, but is definitely the dysfunctioning judiciary and the enforcement of contracts.
Very nice point. I think it correlates to Shilpa's earlier point on the contract as well, where we're thinking too much on the traditional side, and the speed is required on the contract execution as well as enforcement. On a lighter side, I can say that one of the the GC for a very large organization, in one of the meetings, he actually mentioned you should make our litigation team more strong as compared to the contract team, because even if the contract has some loose clauses, that can be taken care of by the litigation because the process is so long. But I think on that note, moving forward to Rohan. Rohan, if you have to give one advice to the fintech industry to grapple with the current, situation, and addressing the operational risk, what will be that?
That's a hard one. Really, I mean, we ourselves are grappling with the challenges that has been imposed by this unprecedented pandemic. But from an operational standpoint, for example, Charles covered how fraudsters have used innovative methods to sort of game the system. India is no different. There's a rampant abuse of the current situation to actually, fish away the hard-earned money of the customers through these innovative phishing calls, and which is why I think regulator also is sort of cautious to open up certain aspects of KYC, of two-factor authentication. I'm sure, I mean, the arguments made by Arpit and Shilpa, of course, hold true, but I'm sure the regulators also have a context, and this must be also playing on their mind, that Indian citizens, at the end of the day, a large chunk of it are not digital savvy and are prone to be exposed to such phishing calls, such false rewards, and they lose a lot of money, hard-earned money, which is not traceable because largely these are anonymous. At the end of the day, you don't, despite the KYC, you're not able to locate the fraudster, and also the enforcement is very, very difficult, right? So from that standpoint, I only have to say that incrementally our employees are also susceptible to these calls. There are a lot of social engineering that goes on, given that everybody is working remotely. Our employees themselves are prone to such calls, and that puts the entity's data, their processes, their system controls at risk. And therefore, organizations should also look at talking to the employees and probably sensitizing them that there are ways and means by which fraudsters are out there to game us.
Thank you so much, Rohan, and I think very fair and a valid suggestion for all the organization. I think we're just 2-3 minutes away from closing this session, but there are a lot of questions that we have received. But maybe I can pick just one in the given time frame. What new measures will a company have to take to reconcile innovation with the need to protect customers' privacy? And I think Shilpa, you have covered a privacy aspect before. So can I request like a 30-second answer from you on this specific point?
Sure, absolutely. So, that's an excellent question. And I think the current proposed framework is based on consent. Consent is the backbone of the entire privacy framework. So I think as a fintech platform, as long as you have consent of your customer, and consent means clear consent. So you may need to update your privacy policy, use text, colors, sort of boxes, so that you can demonstrate that customer consent has been correctly and clearly obtained. If you have consent, I think that can be the basis for you to use that data, share it, analyze it, process it. So I would say consent is the answer to that question.
Sure, thank you very much, Shilpa. Just to add on that, along with consent, I think the framework itself is such that it puts an obligation on the organization to safeguard the customer interest. So to Shilpa's point, what she mentioned earlier was the theme of a trust and the confidence that will be gained basis this framework, which is going to be the central pillar for Indian customers to have a right over their own data with the organization. So I think with this note, I would like to just thank each and every panel here. I think it has been really extraordinary discussion. Thank you so much, Charles, for giving us all the insight. Arpit, for all your KYC, I think you're doing great on our the onboarding, Shilpa, for all your views and on the privacy, KYC, and the contract side, and Rohan, your practical experience from the way the compliance and the risk framework needs to be built on the organization today, considering the pandemic situation. So with that, I would like to close this session, and thank you once again.
Thank you so much, and thank you to all of our sponsors for being here with us today. Another thanks to all of our sponsors, AWS, IDFC First Bank, HomePay, Zendesk, and PayPoint. Thank you so much. Thank you.